The Gartland Group presents Taxes, the IRS, and You with your host, Bernie Gartland. Taxes, the IRS, and You is a different kind of show that'll help you solve your tax problems. As former Deputy Attorney General of the state of Delaware and with over 25 years of experience as sole practitioner in both Delaware and California, the name Bernie Gartland has become synonymous with taxes. And now your host, Bernie Gartland.
Hi everybody, Bernie Gartland. Name of the program is Taxes, the IRS, and You. We call it a different kind of show. We're here every Wednesday to talk about taxes, the IRS, and you. With us today is Bryon Bauer, who is the CEO of American Tax Centers. He was a former auditor with the state of California for 20 years, and we're going to talk about something that's very, very important, and we're going to really identify a code a statute that's very, very important to all of you, because we run into situations all the time that you all out there are what we call non-filers, okay? Now, you that file are not non-filers, but we've run into a lot that are non-filers. And why are you non-filers? We're going to talk about that. And we're also going to talk about why this program this morning is so important to you non-filers. So if you filed your tax returns, you can sit back and relax because it doesn't pertain to you, except I will guarantee you that you know somebody who has not filed tax returns in several years. So I want to introduce you to Bryon Bauer. Say hello to the folks out there.
Hello, folks. How's everybody doing today?
You know, they may be doing well or they may not be doing well. Now, Bryon, we see anywhere between 5 to 10 people a week that have not filed in 3, 4, 5, 10 years.
Right, every week.
And they come in because they're going to get married, and the new wife looks at them and says,
"Clean your act up."
Yeah, what do you mean you haven't filed? They're going to come after me. Or they're getting divorces, cause a lot of non-filing, and procrastination. But there's another major aspect of why people choose not to file. Do you want to tell the folks about what we find all the time?
All the time. The biggest, everyone who comes in who's a non-filer, we always ask them the same question. Okay, why did you not file? The most common response is, I knew I was going to owe money, so I didn't file. And they just continue that every year.
Right, every single year. And by the way, everybody comes in and has attorney-client privilege, so when we ask that question, we're not going to go tell the IRS on them. Right? But here's the situation. We've talked about that when we were doing our radio show for several years. And here on the television program that we have, it is amazing to us on how many people come in and say the same thing. He says, I was going to owe money, so I didn't file.
Right.
And what we say is 1 begets 2 begets 4 begets 10. So what happens is you don't file your tax return because you're going to owe $5,000 or $15,000. Okay? You say, I don't have the money. So they don't file them. Now, there's another aspect that happens. Sometimes they go to a tax preparer that gives them erroneous information. What they say is, well, if you owe money, we'll just file an extension for you to give you time. The extension is void if you owe money.
Correct.
And so you now, because you didn't file, you're going to incur up to 25% non-filing penalty. Wouldn't it be better to file, still owe the money, but not incur?
Right. It's always better to file and not pay than not file and not pay.
Okay. Now, I'm going to read the section of the code and it's going to be on your screen, so you can look at it, and we'll have it up a couple of times during the course of this program. This Internal Revenue Code is not policy, it is the law. In other words, when I read this to you and you see it on your screen, you are going to see that it is mandated that the IRS does something. Okay, so let's go ahead and let's take a look at what Section 6343 of the Internal Revenue Code says. Part A, release of levy and notice of release. That's interesting. So there's a whole section here on release of levy and notice of release in general. Under regulations prescribed by the Secretary, that means that used to be Geithner, who is not there anymore. He's the Secretary of Treasury. Under regulations prescribed by the Secretary shall release the levy upon all or part of the property or rights to property levied upon, and shall promptly notify the person upon whom such levy was made that such levy has been released if, and we're going to go with Part D, the Secretary has determined that such levy is creating an economic hardship due to the financial condition of the taxpayer. I'm going to repeat that section again. The Secretary has determined that such a levy is creating an economic hardship due to the financial condition of the taxpayer. Okay, folks, let's go back to the word that is really important. It says, he shall promptly. The word shall means, yeah, you might want to, or what if. It doesn't mean any of that. It means you will.
You will do it.
Okay, so our concept today is what you have been preaching to people for years and years on the radio and on our television show. If you owe taxes, get the tax returns prepared and file them timely.
Right.
Because if you qualify under what they call a 6343 hardship, the IRS knows it as something called currently non-collectible. If you qualify, what did I just read to you all? It says that if you qualify and it's going to be a hardship, the Secretary shall release any and all levies. Okay. But it also means something else. Bryon, if it says it's going to release levies, it is also preempts. It says if the client is going to qualify for a hardship,
right,
you can't issue a levy.
Right, so one won't be even issued.
So it doesn't get issued on the bank accounts, it doesn't get issued on wages, and it doesn't get issued if you're sole proprietor. It doesn't issue on your contacts that are paying you, you know, your 1099 people. So what is the importance of this? What is the importance of 6343 if we know that if you qualify for hardship that they can't levy? It means you can get back into the system, and the little lady that you're marrying, she's going to say, thank you very much, because I don't want you not filing, okay, because it creates other problems. So what happens is that when you qualify for this hardship, this currently non-collectible status, you file your tax return, but then what happens? What happens when all of a sudden you owe the money, you did exactly what we said, file your tax return? What does the IRS do when you file your tax returns? They may not know that you're in a hardship. You have to show them that you're in a hardship situation. And you do that every single week, don't you?
Correct. We do that every week.
So when we return after our commercial break, we're going to go into the system involved in getting you qualified for a currently non-collectible category so the IRS leaves you alone. Okay? We'll be right back. Democrats and Republicans in Washington both agree the immigration system is broken and needs to be fixed. Hi, I'm Bernie Gartland with the Gartland Group.
And I'm Karen Clare. The new legislation requires clients to be represented in a very different fashion.
And we at Gartland Law are fully aware of those changes and have the expertise you need for any problem.
If you have any questions about the new immigration benefits, call today for a free and confidential consultation.
At Gartland Law, we can help. Hey everybody, Bernie Gartland. The name of the program is Taxes, the IRS, and You, and welcome back. Today we are looking at a specific section of the Internal Revenue Code that mandates that the IRS does something or doesn't do something based on your inability to pay anything in taxes once you owe taxes. Now, Bryon, who is the CEO of American Tax Centers, is here with us today, as always, and he prepares all the tax returns. He does all the audits for the Gartland Group, and we're talking about something that he and I talked about. I'm saying we really got it pounded into the folks out there that if you haven't filed your tax returns, there's no reason not to file them in this day and age, because there's a lot of programs and there's a code section that protects you. Now, before I go into what Bryon has to do and what he has to complete to give to the IRS to have you qualified, I want to run something by you. If you haven't filed in 1 year, 2 years, 3 years, 4 years, you're probably working under the table. Now, if you're working under the table, there's something else that happens. The guys out there in the field know you have to work under the table.
And they'll pay you less.
And they pay you less.
Because they can.
Because they can. Yes, you're right, because they can. And the other thing is that if they're paying you less, then you can't get health insurance for your family because you don't have the ability, because you don't have the money, and you can't work as a W-2 person to get health insurance because he's paying you under the table for this amount of money. And you're driving an old car. Now, guess what happens? You don't have any insurance on your car. What happens if you plow into somebody? First of all, you hurt somebody because you got a clunker of a car that you can't fix because you're working under the table and nobody's paying you the money, okay? Now, what happens where you live? Well, if you're working under the table and he's paying you below minimum wage and you don't have any health insurance, you have a clunker of a car and you can't put gas in the car, now you're living in a home with your children that you're sitting there going, how can I remedy this? Because I want to give my children the best opportunity. And folks, I'm going to tell you something. I'm looking at you. You guys that are not filing, you're jeopardizing yourself and your family. And there's no reason not to file, because we just read to you Section 6343 of the Internal Revenue Code that says to the IRS, if this taxpayer doesn't have enough money to pay the taxes that he owes for a temporary time period, you will leave that taxpayer alone. He will be able to work minimum wage or higher. He will be able to have a car, health insurance, life insurance, and so forth. Tim Berry, who also is one of our associates in all the Gartland Group, we did an analysis, and there are some cases that people can earn $40,000, $50,000, $60,000, $70,000 a year and still qualify
for CNC.
For CNC.
Right.
I mean, think about this, folks. You don't, this sounds so strange. You don't have to be broke to be broke.
Yeah.
Okay? You can earn your living and provide a car, life insurance, health insurance. A lot of you guys and gals out there are accumulating back child support and alimony because you're afraid of the IRS, because they're going to take your money. Section 6343 says they can't. Okay. Now we're going to talk about, Bryon's going to tell you, when somebody comes in and we do those tax returns, because we finally got the message out there, what do you do to get them qualified for the IRS to recognize that they ain't got no money left over?
Well, what we normally do is it's a form the IRS has called a 433A. And most people aren't going to remember that when they watch the show, but it's basically a financial statement.
Right.
We list all their sources of income, whether that be being paid under the table, like you said, or if they're a W-2 or interest income, all sources of income. Then we list all their expenses. And the IRS will analyze that. We have to also provide a lot of times bank statements to support what we're putting on the
These guys don't have any bank statements.
Yeah.
But if they do, we got to provide them.
If they do, we provide them.
Right.
And the IRS allows, based on national standards, plus also where they live, a certain amount of money for clothing and for food and for rent. They have to allow that. And after they analyze this, if it comes down to that after they pay all their current liabilities, there's nothing left over to pay for their tax liability, guess what? They don't have to pay for the next 12 months. They leave them alone for 12 months. And like you said, that gives a person a little bit of breathing room. They're in compliance finally, so all their tax returns are filed. They don't have to pay for at least 12 months. They leave them alone. Now, it's not forever. Some people think, oh, CNC, great. Now I never have to pay. It's not the case. If you go out and win the lotto or you start making $250,000 a year, they're going to reevaluate the situation, and you may at some point have to pay that. But for the most part, you have 12 months now, they leave you alone.
And they just ask for a reevaluation.
Correct.
And let's say hypothetically that you're earning $55,000 and you qualify under those standards for CNC, and the IRS revisits you a year later. All it is, when they say revisit, I don't mean they show up at your front door. They send you a letter and saying, hi, how you doing? By the way, are you in the same financial situation? Yes, I am. Okay, and so you provide the information. And they say, okay, we'll see you another year.
Right.
Now, this gives you an incentive for coming back into the system so you don't have these problems. And there's another thing that we didn't even talk about.
Right.
What about your retirement and Social Security?
Oh, if you're not working, you're not paying in your Social Security. And we have a lot of people that haven't filed 10 or 15 years.
Right.
And they get their Social Security checks, and instead of getting $1,600, $1,700 a month, they're getting $300 a month.
I know.
Because they haven't paid into Social Security.
Haven't paid into it because they got themselves into a situation. They listened to somebody about tax protestation and 861s and everything. By the way, Wesley Snipes went to jail under an 861 constitutional challenge. You know, don't get yourself caught up in that. You know, simply, if you owe money to on your tax return, do not hesitate in filing or not filing.
Yeah, just file your tax return.
Because there's something else that happens. This is so crazy. Part and parcel of the analysis to see if you qualify for expenses from income, you're allowed to make your estimated tax payments for the next year.
Right, they include that in there.
They include that in there. So now you're not paying the old taxes presently.
Right.
And we're going to go into some other remedies in the next segment, by the way, which is going to knock your socks off, as I say back east in New Jersey. But you're in compliance because they have to let you make your estimated tax payments or deduct it from your W-2 wages.
Right.
Okay? So think about this. You guys and gals that are working under the table, you can go get yourself a decent W-2 job. Now, Bryon, they haven't gotten a W-2 job because everyone says, if I get a W-2 job, the IRS is going to attach my wages.
Yeah, they're just going to garnish my wages, so why do it? I'll just continue working under the table.
And there is a reason why that doesn't happen. And the reason is Section 6343 of the Internal Revenue Code says if your gross income minus your withholding, your deductions, minus your expenses, if you don't have anything left over basically, or you're in a minus, the Internal Revenue Service is required by law to put you in an uncollectible category called CNC. By the way, the IRS puts into their computer a code number. When you qualify, the code number is a 530. So anybody working your case in the future pulls up what they have on their computer and they see a 530, they know to leave you alone. Okay? So there's no reason not to file your tax returns. And when we come back from our second break, we're going to tell you other remedies. Because, as you said, well, what happens when they start earning money?
Right.
Do they have other remedies?
Right. Or what happens if they don't qualify for the CNC? Oh, my God, what do I do now?
Exactly.
We have another remedy.
We have remedies, and we'll be right back to tell you about those remedies. Hi, folks. I'm Bernie Gartland, and I'm so proud to introduce you to the Gartland Group. Do you have a need to have your current or prior year tax returns prepared? Is the IRS knocking at your door and you need legal representation? Do you need professional bookkeeping services? The Gartland Group can help. Let us put control back in your life and have that control give you a future.
Call today for a free consultation.
Hi, I'm Al Geiberger. As Mr. 59, I can teach you how to get out of trouble on the golf course. But when it comes to trouble with the IRS, I can't teach you a thing. That's why I went to someone I knew I could trust, Bernie Gartland and the Gartland Group. After seeing how they solved my IRS problems and handled my tax preparations, here's my tip from Mr. 59. Don't take your tax returns to anyone else.
Hi, everybody. Bernie Gartland. Welcome back. This is Taxes, the IRS, and You. We're here every Wednesday. And today, Bryon Bauer, who is the CEO of American Tax Centers, who does all the tax work, tax preparation work, corporate, individual, partnership, all the audits. He was an auditor with the state of California for 20 years, so who better to represent you at an audit? We decided, Bryon and I decided, that we didn't want to do a general Taxes, the IRS, and You program to tell you about all the things that we do here at Gartland Group, which is, go to our website, gartlandgroup.com, and you'll see. We're finding that the word is not getting out to people who have not filed, that you can get back into the system, and there is a law, a statute, a mandate that the IRS has to leave you alone if you qualify for something called a CNC. And I'm going to read you, at the beginning of the program, I read you Section 6343. I'm going to read it to you again because it's that important, excuse me, it's that important that you understand that there is a law that will help you get you and your family back into a place that you can earn your money, you can pay your bills, and you can live a comfortable life without the IRS messing you up. So I'm going to read you Section 6343 of the Internal Revenue Code, and it says, release of levy and notice of release. In general, under regulations prescribed by the Secretary shall release the levy upon all or part of the property or rights to property levied upon, and shall promptly notify the person upon whom such levy was made that such levy has been released if, and Part D says, if the Secretary has determined that such levy is creating an economic hardship due to the financial condition of the taxpayer. I want to read that again. If the Secretary has determined that such levy is creating an economic hardship due to the financial condition of the taxpayer. And let me give you a war story. We have clients that come into us that haven't filed, that have a levy on them, and we start working with what Bryon just outlined to you on the 433A, and we get to the revenue officer or a group called ACS, which is a collection system of the IRS. And over a period of 2, 3, 4 weeks, we show them that you qualify for this CNC status. When they realize that you already have qualified, in many of the cases, they issue a refund of the money that they've already attached if you're gainfully employed. So the concept is, don't let it get to a point where they do a tax return for you because you haven't done it, and they go after your wages in your bank account. You don't have to do that. What we're trying to do is we're trying to tell you, you do not have to wait for the IRS to do what they call a substitute return under Section 6020B, that they will do a tax return for you on made-up numbers. Let us utilize 6343 to go forward and get you in an uncollectible category. Bryon has already told you about a 433A that he fills out with you, and we get you in that category. But Bryon, what about if somebody owes $3,000, $4,000, $5,000, $10,000 and they don't qualify for a CNC, and you do the tax return for them? Let's say hypothetically that somebody comes in because the economics of 2012 was kind of not so good.
Right.
And they didn't do their estimated taxes, and they're sitting there going, wow, I don't know what I should do because this is the first year I'm going to owe taxes, and I owe $7,000, and I don't know what to do. And, you do the tax return. A lot of practitioners will say, well, do an extension so you don't have to pay it or whatever.
Or they'll do the return and say, here you go ahead and call the IRS.
We had that. We had that recently happen. That they told you to go down to the IRS. Okay. Isn't there a special form that you fill out and file with the tax return if somebody owes, let's say, $5,000, $6,000, $7,000, $8,000, $9,000? Yeah. Tell the folks about that.
It's to get them into a streamlined plan. The IRS has this another plan in case you don't qualify for CNC, that if you owe $25,000 or less, they have a streamlined plan, which basically gets you in an installment agreement. And what that installment agreement says is it gives you the chance to dictate to the IRS what you're going to pay and how long you're going to pay it off. You have 72 months to pay that off. So you can take the whole 72 months if you want. You can take less, but you have up to 72 months to pay it off. And there's no paperwork that needs to be submitted. No bank statements, no liens, no levies. They leave you alone. You just say, hey, I want to pay $400 a month. And you send that in with the tax return. They make their first $400 payment. And that's it. They leave you alone.
Now, let me get this straight. The IRS has been portrayed as pit bulls hungering for human flesh. Okay?
True.
I just got myself in trouble, folks. Okay? And you're telling me, and I'm telling the folks, that there is a code that says, hey, IRS, if you qualify for CNC, you have to leave the guy alone. And by the way, they could earn $30, $40, $50, $60, $70,000, and they qualify.
They can still earn a living.
And they have to abide by that.
Yep.
Okay. Now, you're also telling me that the IRS provides a form that says, oh, by the way, if you owe less than $25,000, just tell us what you want to pay.
And that's exactly true. And most people don't know about that.
Then why aren't people filing their tax returns when it's this simple?
Because they're not being given the proper information.
And that's what we're doing today, folks, isn't it? I segue right into that, Bryon, okay? Because that's what we're trying to tell people. We interview 5 to 10 people a week that haven't filed in years and years and years, and they don't have to. By the way, there's something else. You hear about an offer and compromise a lot. We do offer and compromises, and there's new rules and regulations coming out for them. But think about this for a minute. At some point of time, when you file your tax returns, even if you owe money, and you're in an installment agreement, the streamline plan, they don't issue a levy, they don't file a lien, they don't attach your wages to a bank account. And let's say a few years go by, and all of a sudden, all this other debt that you have, you know, Visa, MasterCard, JCPenney's, and let's say you owe this amount of money to the IRS, folks, you can always remedy the situation by filing a Chapter 7 bankruptcy and eliminating the taxes and the credit cards and the repo company coming after you. Taxes are dischargeable in bankruptcy, Section 507 and 523. They are dischargeable. Call us if you don't understand that. That's another topic for another day, but I want to tell you, don't listen to people that tell you you can't do bankruptcy. The whole concept of today is CNC, Internal Revenue Code Section 6343, mandates to the Internal Revenue Service that allows you to get back on your feet and provide for your family and your children. You can get a car, you can get a nice place to live. Why people don't file, we don't know. And that's what we're trying to get across to you folks.
Right.
We want you to file your tax returns because there are remedies. So anyway, Bryon, let's say goodbye to the folks.
Goodbye.
This is Taxes, the IRS, and You. We're here every single Wednesday, and we talk about tax problem solving. We'll see you next Wednesday, folks.